All right. Good morning, guys. Let's do a little back testing on GBPUSD this morning. Okay. So I'll start from the higher time frame. That is from the daily time frame, then to the lower time frames. You get it. So let's get into it. So let's see what the daily time frame is saying. Consider we are in a downtrend. You can see market getting higher highs, higher lower lows, lower high, lower lows, lower high. So that means we are in a downtrend, and then market broke this structure, this leg, okay, which is giving us this pullback. Okay, market is giving us this pullback to the upside, clear some liquidity, then come to the downside. Or we can just come to areas like this, then we continue to the upside again. But until then, we will focus on this one. All right. So you can see as we always trade, we trade with the A, B, C concept, which here is our liquidity or our inducement, which normally market will take, then goes to the upside, or market will just come to these areas for a push to the upside. So this is our trap or our liquidity area. So I think that is what happened on this leg. You can see we got this push to the upside, push, came back down, market came, then it took out this high. Consider when it took the high, because this was very close to which is almost like an equal highs or something like that. Market just took this high, which was our actual inducement or actual liquidity. Then it goes up to clear another this one too. Then you can see that we had a push to the downside. You get it? Yes. But don't forget that here is our actual zone. This place is the zone that we're expecting price to come. Okay, then we see we got maybe a push to the downside, which the push to the downside might be maybe market will come down to these areas, or market will break below this. Okay, it will break below this, then we'll go to a push to the upside. You get it? So this is something that I'm expecting. But now you can see that markets reacted from these areas, and you can see market just took out liquidity from these areas. It took out this liquidity from here, from here. So you can clearly see that as market took out this liquidity, the probability or the chances that market is going to continue to the downside, okay, and react from any of these areas is high. So let's see what the market will do in the near future. Now let's go to the 4 hour time frame and see what the market has for us. So on the 4 hour time frame, this is what I'm seeing. I'm seeing a lot of liquidity, a lot of liquidity. You can see here, this is a liquidity area. You can see this is a liquidity area. So okay. So with the concept that we trade, which is structured in liquidity, I will say, let me try again, refine this. We reacted here, reacted here, reacted here. All right, let me try again, refine that one. Let's see. Okay, then the market will, let me refine this to the upside. We took out this liquidity, this one. We see this. So it makes the zone a solid one. But then the market will always do whatever he wants to do. You get it? He will always do whatever he wants to do. But then market key, instead of reacting from the zone, then so it took out the zone, took out the high of the zone, which is very good. So now this is my next liquidity target for the zone. Then my next zone will be around these areas. Took out liquidity. My next zone will be here. Okay, here. Then my breakup structure is this place. My breakup structure is this place. Wait. Yes. So you can see I'm expecting the price to come and react. I'm expecting price to come and react from these areas. Then we continue on the upside movement. Or better still, price can just take out this liquidity area. Then we'll push to the upside to take out this liquidity. Then maybe we'll push the downside. So there are a lot of things that can happen. Don't forget, these are just a daily time frame zone liquidity areas that I'm expecting price to clear. Okay, don't forget this daily time frame liquidity area that I'm expecting price to clear. Then we react from whether here we react from something below the liquidity, or maybe we just come to the downside to clear more liquidity. But then let's see what happened. Let's see. So here too is our liquidity there. So I'm expecting price to come into these areas as well for my sell trades. Okay, here is my liquidity area. Okay, I would expect price to also take out those liquidities, then we up to the downside. So until those things happen, we are still waiting for proper market reaction. Okay, I'm seeing two different things altogether. I'm seeing a liquidity point area here as well. Let me let me choose my liquidity. Yes. I'm also seeing a 15 minutes liquidity area here and another 15 minutes liquidity. So let's see. Let's play price then see. And let's play price and see which is 10 p.m. 10 p.m. I'm done trading that day. So let's see. Let's push price to the next day's agenda or next day's activity is 2 p.m. Okay, nice, nice. There is here is my liquidity. Mind you, I trade liquidity and structure alone, so expect more of that things. Okay, market is actually reacting from here. Wow, that's crazy. Let me see. It's actually reacting from here. This vertical liquidity, then this. But here is my 4 hour liquidity point. So let's see. Maybe we are going to the outside and we come back down. Let me go to my 15 minutes to see how we can be taking advantage over these small moves to the upside. Don't forget, here is my liquidity point as well. You can see we are having the A, B, C structure, right? Which here is my liquidity area. So I'm waiting for price to see in a 15 minutes. Let's see whether we will take out that area or market will just react from there. Let's see. Let me zoom in and see what. Yes, you can see that market has taken out the high, took out the high, and took out the high again. So clearly, it's because of how I am doing the back testing. I cannot go down to the 5 minutes six. So I would take the entry from the 15 minute area. Okay, so I'm just presenting what's my system, what I treat. You get it? So, however, whatever thing that will happen, cool, go. So we had this, which is a very nice stop loss from these areas. But then I still believe we will go to the downside. So let me re-entry again from here, re-enter again from here. I still believe we will go to the downside. If this one fails, I will wait for price to present itself well. Wow, that's nice. Two SLs. So let's wait for price to present itself. That's 8 p.m. Oh, oh. I will not be trading at this time though. 8 p.m. is too late for me to be trading at this time. So it's like that whole day we wouldn't have been getting any proper trade. Wow. But it's still not bad. Still not bad. I'm sure price actually reacted from here, which was a very good zone to trade from. You could see that one. Okay. It's a very nice zone to trade from. Very, very nice. You get it. So once price failed to react from your liquidity point, this here was the zone that you reacted from, and we are coming back down here. We are going to clear all these things. Don't worry, we'll clear all these things. But then let's see what price has for us after this liquidity taking. Should I say this is another ABC structure? ABC structure. Let's see. It looks like another ABC structure. So let's see if price will. You need to be realistic, or more. If not, you collect auto auto. Wow, that's that's nice. Why? Why is that? I'm taking all the trade that I'm taking is going into losses and all that. I think I should have waited for price to. Price came back here, took out this low. Very nice place. Let's see my last trade. Why is that price doesn't want to respect my trade idea? Yes, that'll be a very nice trade. So you can see that we had this. Okay, we had this liquidity, which was a major liquidity on the 1 hour time frame. Okay, you can see this was an obvious ABC structure, but then most of the time markets has to react from these things, react on from the internal structures before maybe it will come back to the it starts moving to with the actual structure that you are looking at. You get it? So that is it. So we had this 15 minutes ABC structure. Market took out it. It failed to give us an entry here, but you can see that there was a zone here was which was a very risky zone because there was a liquidity point as well. But then market reacted, it came back, took out this low, pushed to the upside, it came back then to the major liquidity. Then we had a push to the downside. So far, this is 1:6. So even if you subtract the two, I think the 2 or 3 losses from it, still I will be in profits of three. If I'm risking 1%, I will be in profit of 3% or 4% by now. So it's 8 p.m. Let's wait for the next day. Let's wait for the next day. Let's play price for the next day. Can see we are still going to the downside. Can see? Yes. So that's how the ABC structure works. Like it's simple. It helps you to spot the liquidities, the actual liquidity point. All right, you don't have to be, if you don't have to, they always say that it's either you become the liquidity, all right, or you spot the liquidity in order not to become liquidity. So I use the ABC structure to spot my liquidity, which is like this. Let me pick it. So this is my A point, my B, my C point. So it's either market will clear this liquidity, then push to the upside, or market will come and react within a zone here, then push to the upside. So that is the ABC concept. And you can see that we caught a very nice trade from here. We caught a very nice trade from this place. You can see. And definitely our take profit will be this area because we always use the C level as our um target area. All right. So this is was 1:9, 1:10, very nice, 1:10. So you can see that we had three losses, all right, during the back testing, but then at the end of the day, this trade has cleared the losses and given us almost 7%. So as I said earlier, I told you that this area is a liquidity area. You get it? So it's either price will take out this area, then it will react from a zone here and push to the upside, or price will just can just after taking out the low, it can just reverse. So since we cannot go into the lower time frames um for confirmations, all right, we will just let me just take the trade. Let's see. If it fails, we will wait for a reaction from the zone. That will all. So I'll put my stop loss here because here is another ABC structure. You get here is another ABC structure. I don't know. So this is a liquidity area that we are waiting for price to take. If price takes this thing, we are going to the downside. We are selling. And you get it. But since we are buying from here, we will wait and see if price will push to the upside. Okay. You can see that you could see we had another ABC structure within this area, which here was a liquidity point price. We took out, we pushed to the downside. And this thing is very powerful. It's very, very powerful. So from here to here is almost 1:3, 1:4, which is nice. But then we will still play price. Don't forget we had this two as well. ABC structure, which is here is our liquidity. Market reacted from here. Market reacted from this zone. I don't know if you saw this. They reacted from this zone. It took out this liquidity. So it will just help you to know the next where the next liquidity is. You get it. So let's see. We we smashed TP nicely. Okay. So don't forget we are reacting from a 4 hour time frame zone. So we will take partials, then allow the rest to run. Maybe you could take profit from this high. Something like that is possible to happen. But then don't forget that let's go to the 1 hour time frame. The 1 hour time frame too, we have this zone here that maybe price can react from the inside to the downside. A lot of opportunities to take advantage. If we lose, definitely one or two of them will go through. So you see, you just have to treat the same setups. You get it. You can see that we sold after price came, then took out the liquidity. You get it. It's crazy. It's crazy how this thing works. But you could see that markets here also are high, which is a liquidity area. This is a liquidity area, our next liquidity area. Then that's why we try to take advantage over every liquidity point because you don't know what will happen next. You get it? Yes. So now markets just came and react from these areas here. You can see, you can clearly see this. But this is a very wide range for me though. So it will be hard for me to take a straight from there. But then since we were able to catch two entries from these areas, which is this one